Hello, welcome to Fintube, where we make finance easy. And this episode, we are going to discuss over two events which were absolutely irrational. So, what happens when you take excessive risk and things go south? Yes, this is what happens. Total ruin. So, as I said, in this discussion, we are going to talk about two insane events. One, negative price for an asset, and second one, 28k crore lockdown of investors' money. Over to you, Guru.
Indeed, Archit. These are tough times for investors across all asset classes, right from stocks to commodities to fixed income securities and God knows what. And last week there was a crude shock, pun intended, crude shock to investors, wherein the crude oil derivatives price, futures price, went into negative $37. Can you imagine? You're paying the buyer to buy the security. I couldn't imagine this in the context of finance. And to explain you what exactly happened, I would like to use the example of mangoes, given it's the mango season. So suppose you're a seller of mangoes, and I enter into a contract with you that at the end of April I'll buy some mangoes from you at, let's say, 500 rupees per dozen. But given I love mangoes, I bought them out like way before April 30th because I couldn't resist them. And you were left with so much stock that ultimately you thought that you would have to like throw them away because there were no buyers. So now in this situation, if you think you will have to spend 100 rupees to dispose of those mangoes, if somebody else is ready that you'll pay him, let's say, 37 rupees and he'll buy it back from you, won't you choose that choice rather than paying 100 rupees to dispose it off? That's what happened in crude. Big shock.
One thing which I would like to add here is that this move happened only in WTI. So, what is WTI? WTI is West Texas Intermediate. It is a benchmark for US crude. So globally, there are two major benchmarks which are tracked. One is Brent, and second one is WTI. So as I said, WTI is mostly for US crude, while Brent is for non-US sort of contract. So Brent is the benchmark for almost two-thirds of the world's contract. Now, this move happened in WTI because the contracts were expiring somewhere around 21st of April for delivery in May. So remember this. And WTI originates in Texas and is settled in Cushing, Oklahoma, whereas Brent originates in North Sea. So as you can imagine, Brent has some easier and cheaper distribution channels as compared to WTI because WTI originates in a landlocked zone. So this is the key difference that I would like to highlight. So that is the reason Brent fell, but not it did not go negative. So this is the point that I would like to highlight. So it proves Warren Buffett's point that derivatives are weapons of mass destruction because ultimately contract settlement is what led WTI to negative prices. Over to you, Guru.
Very true, very true, very interesting point, Archit. I would also like to draw attention to Warren Buffett's another quote, wherein markets then remain irrational. So yeah, interesting times for the market, and this has definitely highlighted the importance of risk management in each and every investment or trade or any decision you make.
Absolutely.
In bull markets, people focus on all only returns, returns, and returns. But in bear markets or events like these is where risk comes to fore. So yeah, risk comes first.
Risk management comes first, absolutely. And you know what? The point that you said that brings us to our next topic for discussion. What happened in India? That is the Franklin story. So before coming to the Franklin story, actually, I recollected that this mayhem in WTI had some spillover effects in India as well. So Zerodha came
Oh
out with a
yeah.
note. Zerodha came out with a note that they are in a debit of 10 crore, in the sense that they are yet to recover 10 crore from their clients. So this panned out because imagine a person who has bought futures, right? So imagine the person who has bought that asset. Suppose that asset he bought at 10 rupees, right? So what is the maximum loss that he can have? 10, because I mean, the margin requirement is assuming that the lease price is zero. But because these contracts settle at a negative rate, the losses exceeded the margin, so brokers had to pay those additional settlement cash flows out of their pocket. And as I said, as they exceeded the margins, they are now in a position that they need to recover those from the clients. So 10 crore is just zeroed a share. I mean, we are not aware what is the industry debit like. So this can have
Oh my
some
God.
ripple effects all over the globe as well in India, as I said. And then
And
coming
again,
to
I
the
think highlights
yes,
the importance of risk for everybody, right, from investors to brokers. Indeed.
absolutely, absolutely. As you said, right? I mean, we talked about India, we talked about brokers going bust. That might be a scenario. I mean, it's not official, of course, and it's not public yet, but that might be a scenario where they are not in a position to recover the amounts. So similar thing happened in Franklin. Almost 31,000 crores of investors' money in lockdown, not able to redeem those, not able to subscribe to those. So, in simple words, what happened is like, I mean, when you create a FD, right? So basically, when you create a FD, is you buy an asset. So FD is your asset, and at maturity, you sell that asset to get your money back. Now, these debt funds, they bought assets. So those assets were bonds of different companies, and during crisis times they were not able to sell those bonds at reasonable prices, so that's when they started to incur losses. So what do you think, Guru? What drove this? Is this COVID alone?
No, definitely, Archit. I mean, as we highlighted earlier, all asset classes are facing problems in these times. So, taking the example of these bond funds to, generate a little bit more alpha to their investors, they ventured into more risky debt, giving loans to power companies, giving loans to infrastructure companies, or
Oh God.
NBFCs, which usually banks are very risk averse to lend to. And all these,
Yeah.
again, in chasing more returns. So this again coming to our point highlights the role of risk because even in fact in terms of bad times is where these companies have started suffering. So let's take power for
Yeah.
example. Given the lockdown situation, the consumption is down, industries are closed because of no workers, and the power sector has just collapsed. I mean, how are they
Yeah.
going to pay off that interest or the principal of the debt unless they generate their own cash flows? Same happened with NBFCs, wherein banks were so risk averse given especially the reasons like ILFS fiasco and other
Yeah.
NBFC crisis. All this ballooned together and led to this final nail in the coffin for Franklin Templeton mutual funds. So, what do you think,
Absolutely.
Archit? I mean, uh, how especially is what should one investor focus on, especially in these times?
I think the FAQs that I read, most investors have this question that whether they'll get back their money. Now, I mean, this is very difficult to answer, but what I want to highlight is Franklin has done an excellent job. It has ring fenced that particular portfolio in the sense that it'll yield cash flows, or in simple terms, the investors would get money only when the underlying assets generate some cash flows. So, I mean, in such scenarios, lower the maturity, faster will be the recovery for investors. But if they're sitting on a fund which has higher maturity, then I think they might be in some trouble recovering their money. Again, this is just an estimate. Things may turn out to be better if the macro situation improves. And so we all talk about ads. Does this fiasco in mutual funds remind you of a certain ad?
Very true, Archit. Again, like this ad is set so fast over the advertisements that it's the least focused, but now the importance is highlighted. Mutual funds are subject to market risks, Please read the offer documents carefully before investing. And
Yeah,
also highlights the importance of investors to have a financial advisor. Do not take decisions on your own unless you are an expert in the same. Do get in touch with your
absolutely.
financial advisors to get your own plans tailor made in terms of your risk, in terms of your goals, in terms of your timelines, in terms of asset allocation. Because as we have seen in the past few weeks or past few months, investing in a single asset would have been a disaster, but diversifying it could have protected the portfolios to some extent.
Absolutely. What a valid point that you have said, Guru. Absolutely valid point. So this is the crux that we wanted to discuss on these two events. So thank you all for watching our discussion. We come up with some interesting discussions going forward. Market is expected to be more interesting in the weeks ahead. So do tune in to our channel for such interesting discussions, and definitely we'll add fun to the financial events.
Also,
Guru,
always welcome to
yeah,
chat. Always welcome to chime in the comment box for any interesting topics you're interested in. We'll definitely try our best to present it to you in the most easiest way possible. So keep learning, keep watching, keep growing, be safe. Thank you very much.
thank you all. Thank you.